This is the Global Wealth Show with Grant Connis and Andrew Costa.
At a young age, people very close to me were really hurt by the financial markets, and that drove me to be in this industry.
The vision was to change the industry.
Everybody calls this your nest egg, and I think of it as so much more than that. This is your life savings.
So being that guide, that coach for our clients is why we do what we do.
What we do could change someone's life.
The Global Wealth Show begins now.
Make sure you're working with someone who really cares about putting a plan together for you to solve your needs versus just pushing a product, selling you a product.
That as truly independent fiduciary advisors who are required by law to work in the best interest of our clients at all times, we feel that it's the ability to go out and bring in whatever's right in the investment universe for our clients if we see that's fit inside their plan. So being an independent is really, really important.
A lot of people out there save into their IRAs, their 403Bs, their 401Ks, and they do so well through their work life, or maybe they have a pension that comes in but right as they retire, that all of a sudden this savings vehicle that they thought they were going to need for income is now not important for their income needs.
The Global Wealth Show begins now.
Hi, I'm Ben Bauman, and welcome to another edition of the Global Wealth Show, a show that helps you plan the retirement you want. Today, South Florida's premier financial advisors, Grant Connis and Andrew Costa from Global Wealth Management, will discuss why finding the right financial advisor is so important. Also, are you paying too much to own your investments? And then in our Global Perspective segment, Grant will be sharing some of the biggest pitfalls in retirement income planning. It's a financial workshop for free, right here in your own home. So let's get started. Andrew, Grant, welcome.
Hey Ben, great to be here.
Thank you.
Good to have you. And financial advisors, so many choices. How does somebody go about choosing the right person for them to work with?
Well, that's a great question, Ben. And I can't really necessarily speak for others, but I will tell you that Grant and I have known each other for 25 years plus, and we're born and raised here in South Florida. And about 10 years ago, we started Global Wealth Management, co-founded Global Wealth Management, and we did so based on really trying to change this industry for the better, change some things that we weren't really thrilled that were going on in this industry. And one of those things was this industry is dominated by big box firms, and as an advisor for those big box firms, you go out and you get your license and you walk out the doors from taking that test and you're anointed this money manager. And we just looked at that and said, you know what, I'm not sure that person is all that different from the person at home trying to do it themselves and picking their own stocks and stuff. And so what we did see, though, is that people with 15, 20, $30 million in assets and above were getting direct access to these top institutional management teams, these professional asset managers, maybe the top 100 managers in the country. And we said, you know what? How can we get the everyday investor, the person with $250,000, $500,000, the ability to do the same thing, to get that same level of service to this top institutional management team? See, they were getting swept under the rug. And we really call this wholesale versus retail, allowing a client to go wholesale, go directly to the manager, versus retail where they're pushed a product and a mutual fund and all these things, the hot thing of the week that the big box firm is trying to push. So that's what we did here at Global Wealth Management, and that's what we continue to do day in and day out.
And Ben, another thing too that I think is really important is from day one, we thought it was absolutely essential to become a truly independent financial advisory firm. One that does not have any shareholders to report to. Because that's what happens with a lot of these big box firms that Andrew was mentioning is they have shareholders, and their shareholders might be saying sell this product or that product, but as truly independent fiduciary advisors who are required by law to work in the best interest of our clients at all time, we feel that it's the ability to go out and bring in whatever's right in the investment universe for our clients if we see that's fit inside their plan. So being an independent is really, really important. The other thing that we did is we found that there was a niche with individuals who were either planning for or living in retirement, meaning those that are in retirement now and they need income from their investments, or those that are 5 to 10 years out from retirement that need to put a game plan in place to get them from where they are today throughout the rest of their life to make sure that they never run out of money. So that's exactly the niche that we wanted to fill here at Global Wealth Management. One of the other things that we did as well that was pretty unique is we went out and hired in arguably one of the top portfolio management teams in the country to manage money for our clients. So our management team, all they do all day long is they manage and monitor about $7.5 billion nationally on behalf of our clients and several other advisors around the country into 25 different investment portfolios. And the benefit there for our clients is we could be in a meeting with another client, or we could even be on vacation with our families, and our clients know that their money is being watched and managed and monitored on a day in, day out basis. It gives them a lot of confidence as well. And then the final piece of the equation is we partner with Fidelity Investments as our custodian. And what Fidelity does is they put a big fence up around our client's money, if you can imagine, and we manage inside that fence as the advisor for the client, but nobody can take anything outside that fence except for the client. And that gives our clients a lot of peace of mind to make sure that their assets are protected at all times.
Yeah, absolutely. What about if I'm working with a financial advisor? What might be some of the red flags I might want to watch for?
Yeah, good question. Real quick, I would say there's so many, but real quick, two that I think are really important is communication. Make sure you get the communication you want from your advisor. So many people don't feel they're getting the communication they want, and that's something that we really want to make sure all of our clients have. The second thing is make sure you're working with someone who really cares about putting a plan together for you to solve your needs versus just pushing a product, selling you a product. I think those are two really important red flags to look out for.
All right, great guys, thanks so much. Again, great information. Coming up next, are you paying too much to own your investments? We'll discuss that and what you might be able to do about it. Then later on, Grant will share some of the biggest pitfalls in retirement income planning. First though, here's how you can contact Grant, Andrew, and the team at Global Wealth Management.
Are your investment accounts exposed to too much risk? How will your nest egg be impacted the next time the market experiences a major correction?
Whether you're in retirement or nearing retirement, now is the time to secure your financial future.
Is your nest egg ready to help you meet your retirement goals for the rest of your life?
At Global Wealth Management, we want you to succeed.
Global Wealth Management is a South Florida investment management firm that specializes in capital preservation, income investment, and estate planning strategies for those planning for or living in retirement. Now is a great time to get a retirement roadmap review with Grant, Andrew, and the team at Global Wealth Management.
It's one of the most important things that you can do for yourself and for your family.
Here's what they'll do. Review your current strategy and expose some of the hidden weaknesses of your retirement portfolio. Compile a fee report to uncover how much you're really being charged in fees. Show you safer money alternatives. Plus, we will stress test your portfolio and do a risk assessment of your current retirement accounts.
We believe that planning for retirement should be taken very seriously.
Call Global Wealth Management now to get started on your retirement roadmap review. And if you're one of the first 10 qualified callers, you'll receive the top 10 things to consider when preparing for retirement guide. Now is a great time to get a retirement roadmap review with Grant, Andrew, and the team at Global Wealth Management. Call Global Wealth Management now. You're watching The Global Wealth Show with Grant Connis and Andrew Costa.
Welcome back to the Global Wealth Show. I'm here with South Florida's premier financial advisors, Grant Connis and Andrew Costa from Global Wealth Management. Okay guys, so how do we know if we're paying too much to actually have our investments?
That's a great question, Ben. And the problem is it can be difficult to find. This industry, if you're not careful, can be riddled with fees. It's very difficult from time to time to really truly understand what you're actually paying. And mutual funds, for example, would be an investment that can be pretty murky. There was an interesting article that came out in the Wall Street Journal not too long ago. It was called The Hidden Costs or the Hidden Fees of Mutual Funds. And the article stated that mutual funds could be 2 to 3 times more costly than advertised. Then the article goes on to say that the SEC, who kind of governs this mutual fund industry, they actually testified in front of Congress on this whole fee disclosure issue that was going on. And Congress came back to the SEC and said, since there's not a common way for this mutual fund family and that fund family to report their trading costs, because that's one of the biggest line items on a balance sheet of a mutual fund company, but since there's not a common way to do that, they said, you know what, you can just leave this out. You don't need to tell the shareholders what that is. And I don't know about you, but if someone said, hey Grant, we're going to charge you 1% this year, and oh, by the way, it's 2 or 3 or more, it wouldn't sit very well with me. And that's one of the things that prompted us, several years back to adopt what we call our cost analyzer. And it's part of our retirement roadmap review. And what our cost analyzer does is it allows us to depict not only the disclosed fees, which we call the stated costs that are listed in the prospectus.
The ones you can find.
Absolutely.
Yeah, right.
But more importantly, the undisclosed fees, these hidden costs that are permitted to fly under the radar, like trading costs and taxes and things of that nature. And it's a great exercise to go through because most people maybe they don't think they're paying anything, or maybe they think they're paying 1%, and a lot of times it's a lot more. And one of the examples I like to use around that is, if you think about an iceberg, right, in the water, like, it's above the water, right, because you can see that, but you have no clue what's beneath the water. It's the same thing as it relates to your investments. What's above the water is maybe those the advisor fees, maybe that 1% a year, whatever the advisor's charging you. But what's below the surface are these investment costs, is 2, 3, 4% a year in mutual fund costs, for example.
Yeah. Okay.
We've had so many people come in and want to find out what's below the surface, and like Grant was talking about. And recently we had someone come in the office. His name's Greg, nicest guy in the world. He's Midwest guy from Wisconsin, and he's self-made and has done really, really well for himself. And I always pick on him because we know this fee thing exists and this underlying cost exists, but you kind of would think, well, maybe it only exists for those maybe with the smaller sums of money. And Greg had $7 million saved when he came into the office, and he said, I heard you talking about this cost analysis, and I want to know what I'm paying. But I asked my advisor over and over and over again before I came to see you, what am I paying? And the advisor kept saying 0.6%, 60 basis points, they call it in our industry. And I said, Greg, well, great, we'll do the cost analysis, we'll input everything that you have. And he had mutual funds and variable annuities and hedge fund type investments and all this stuff, unit investment trust. I said, we'll input it in, we'll have you come back in a week and we'll go through it. And he comes back in a week later, and I'm kind of nervous to meet with him because I'm thinking, well, what's the nicest guy in the world like when he's not the nicest guy in the world?
So the news is not great, right?
The news wasn't great. And so I sit down with Greg and I say, Greg, your advisor was right to some extent. 0.6% is what's above the water in that iceberg. That's what he is charging you. But beneath, there's an extra 2.4% per year in fees with these disclosed and undisclosed fees. And I said, Greg, that's $210,000 a year in fees. And he starts turning like this different color of red. and I said, Greg, don't worry about it. We can definitely get it fixed. And he said, Andrew, I know we can get it fixed. But he said, I've been with my advisor for 10 years, and over the last 10 years, I've spent $2.1 million in fees. So this is a big deal. You have to understand what you're really paying, and one way to do that is through this cost analysis that we've created.
Yeah, okay. That is great information, guys. Thanks once again. After the break, Grant will share some of the biggest pitfalls in retirement income planning. Still to come on the show, Grant and Andrew will both be back to answer your questions. First, here's how you can contact Global Wealth Management. Stay tuned.
Are your investment accounts exposed to too much risk? How will your nest egg be impacted the next time the market experiences a major correction?
Whether you're in retirement or nearing retirement, now is the time to secure your financial future.
Is your nest egg ready to help you meet your retirement goals for the rest of your life?
At Global Wealth Management, we want you to succeed.
Global Wealth Management is a South Florida investment management firm that specializes in capital preservation, income investment, and estate planning strategies for those planning for or living in retirement. Now is a great time to get a retirement roadmap review with Grant, Andrew, and the team at Global Wealth Management.
It's one of the most important things that you can do for yourself and for your family.
Here's what they'll do. Review your current strategy and expose some of the hidden weaknesses of your retirement portfolio. Compile a fee report to uncover how much you're really being charged in fees. Show you safer money alternatives. Plus, we will stress test your portfolio and do a risk assessment of your current retirement accounts.
We believe that planning for retirement should be taken very seriously.
Call Global Wealth Management now to get started on your retirement roadmap review. And if you're one of the first 10 qualified callers, you'll receive the top 10 things to consider when preparing for retirement guide. Now is a great time to get a retirement roadmap review with Grant, Andrew, and the team at Global Wealth Management. Call Global Wealth Management now. You're watching The Global Wealth Show with Grant Connis and Andrew Costa.
Welcome back to the Global Wealth Show. We're here with Grant Connis, and he's here now to help us understand some of the biggest pitfalls in retirement income planning. So Grant, what are some of those pitfalls?
Thanks, Ben. You know, two of the most common pitfalls that we see day in and day out in our practice have to do with cost. How much are you actually paying to own your investments? Are you paying too much to own your investments? And we've developed a cost analyzer. It's part of our retirement roadmap review that has been very beneficial. So when you come into the office, we can actually show you not only what the disclosed fees are, what you know you're paying, but more importantly, the undisclosed fees, some of these hidden costs that are permitted to fly under the radar. But in today's global perspective, what I wanted to really do is spend some time around risk and really understanding what risk is and really making sure that you're not taking too much risk as it relates to your portfolio. And I wanted to highlight today a story of Jim and Sharon. They came into the office and they had about a $540,000 portfolio. And Jim and Sharon had recently retired. They were in their mid-60s. And they were starting to take income from their portfolio, and they needed this money to last them for the rest of their life, just like everybody does when they're in retirement. And the first thing that we ask when they come in the office is these two questions. Number one, we want to understand and define the amount of risk that they're currently taking, and then what they're comfortable with. Once we know those two numbers, then we can start building out a plan and start talking about this investment strategy or that strategy. But until we understand and define the amount of risk that they're taking and what they're comfortable with, then we really don't know. We're just kind of throwing a bunch of investments up at the wall, and that's kind of not the way to do proper income planning. So when we asked Jim and Sharon these questions, they said, you know what, we really don't want to lose more than 5% in a given year. We always say, you know, no one likes to lose money, but if, you know, what's the downside risk and where you would get uncomfortable? And they said about 5%. And so what we did from there is we actually had our financial planning department input all the different investments they had, all the stocks, all the bonds, all the mutual funds, and they owned a variable annuity, and it generated this bell curve. And we call this bell curve knowing your number. You see, everybody has two numbers as it relates to their money. Everybody has a good number, what you can make in a good market, but more importantly, everybody has a bad number, what you can stand to lose if we went through another 2008 type scenario. And the way that Jim and Sharon sat that day, their good number was they had the ability to make about $211,000 or 39% on their money if we went through a banner year in the market. And though we'd love to see that, what we really wanted to focus in on was not necessarily their good number, but more importantly, their bad number. And the way that they sat that day, they ran the risk of losing about 34% or $184,000 of their life savings if we went through another 2008 type scenario. So mind you, I mean, here's a couple in their mid-60s, you know, recently retired, starting to take income from this to live off of. They needed this money to last them for the rest of their life, yet they ran the risk of losing $184,000. I mean, think about it. It probably took them over 10 years just to save that $184,000, and they could lose it just like this in one given year. And then what we looked at next is we said, you know what? You told us that your downside risk is you didn't want to lose more than 5% in a given year. Well, if I had to put 5% on the map, it would be somewhere here. So obviously there was a bit of a disconnect going on between the way they wanted their money managed and what it was actually doing for them. So the good news is we caught this at the right time, and we were able to get it more in line with the way that they wanted it to be. You see, just because everybody lost, 40% in 2008, that doesn't make it acceptable. You know, if you're someone that can't stomach more than a 5% or 10%, or maybe it's even 0% downturn, believe it or not, you can set your portfolio up to do just that. It doesn't need to be the way that everybody else is doing it. And that's the way that we were able to help Jim and Sharon. And we see this every single day. You know, people say they're conservative investors, and all of a sudden, they run into a scenario like this where they could lose 30 or 40% of their life savings. So do yourself a favor, take the time to get a risk analysis done, know your number, and I'll tell you what, if you knew your exact number, more importantly your downside number, it would give you a lot more confidence the next time the market sells off.
All right, Grant, thanks. Still to come, Grant and Andrew will both be back to answer your questions. Our Q&A session's coming up. First, though, here's how you can contact Global Wealth Management. Stay tuned.
You're watching The Global Wealth Show with Grant Connis and Andrew Costa. Are your investment accounts exposed to too much risk? How will your nest egg be impacted the next time the market experiences a major correction?
Whether you're in retirement or nearing retirement, now is the time to secure your financial future.
Is your nest egg ready to help you meet your retirement goals for the rest of your life?
At Global Wealth Management, we want you to succeed.
Global Wealth Management is a South Florida investment management firm that specializes in capital preservation, income investment, and estate planning strategies for those planning for or living in retirement. Now is a great time to get a retirement roadmap review with Grant Andrew and the team at Global Wealth Management.
It's one of the most important things that you can do for yourself and for your family.
Here's what they'll do. Review your current strategy and expose some of the hidden weaknesses of your retirement portfolio. Compile a fee report to uncover how much you're really being charged in fees. Show you safer money alternatives. Plus, we will stress test your portfolio and do a risk assessment of your current retirement accounts.
We believe that planning for retirement should be taken very seriously.
Call Global Wealth Management now to get started on your retirement roadmap review. And if you're one of the first 10 qualified callers, you'll receive the top 10 things to consider when preparing for retirement guide. Now is a great time to get a retirement roadmap review with Grant Andrew and the team at Global Wealth Management. Call Global Wealth Management now. You're watching The Global Wealth Show with Grant Connis and Andrew Costa.
Welcome back to the Global Wealth Show with South Florida's premier financial advisors, Grant Connis and Andrew Costa with Global Wealth Management. You know, the future of your finances is far too important to leave to chance. Your goals, your dreams are unique, so it's important to hear what questions you have about retirement. That's the point we've come to. Are you guys ready for this?
Absolutely.
Q&A. Here's one from Doug in Coral Gables. I have to start taking required minimum distributions. What do I need to know?
Well, it's a great question, first of all, and it's a very common question that we get a lot. Required minimum distributions are also referred to as RMDs, and it's a rule from your retirement plan that you must take out by age 70 and a half that minimum amount so that Uncle Sam can now receive his tax money that he never got from that retirement plan. So whether it's an IRA, a 401k, a 403b, a 457 plan, any type of retirement plan, at age 70 and a half, you must start taking out those withdrawals and start paying taxes on that money. The problem around this is most people we find are not taking their RMDs the right way. And what I mean by that is at age 70 and a half, the required minimum distribution starts just under 4%. You must take out right around 4% a year, let's call it. And then that amount goes up a little bit every year. So for example, we have a client who's 95 years old and he has to take out 10% out of his IRA. So it can quickly creep up on you. And we had a woman that came into our Fort Lauderdale office a couple weeks ago. Her name is Mary, and she was 75 years old. And she had an IRA that she had been taking her required minimum distributions for about 5 years since she was 70 and a half. And we went through part of our retirement roadmap review, which is called our income analyzer. And what we found out is going through this income analyzer was that Mary's investments, her IRA specifically, she was only generating about 2% in income. Granted, she had to take out about a little over 4. She was only earning 2.
Okay.
So what happened was she was going into principal over that 5-year period and starting to deplete her IRA, and she was afraid she was going to run out of money. So properly showing her how to put a plan together to take the RMDs the right way was absolutely essential for her. And this is something that we do every day. We see it all the time, that people just aren't taking the RMDs the right way.
All right. Yeah.
It's interesting, Grant and Ben, is that that's the common thing that we see. It definitely is that you're taking out your RMDs, your required minimum distributions, and you need that income to live your life. Yeah. But a lot of people out there save into their IRAs, their 403bs, their 401ks, and they do so well through their work life, or maybe they have a pension that comes in but right as they retire, that all of a sudden this savings vehicle that they thought they were going to need for income is now not important for their income needs. They have enough without it. And so what happens is the RMD becomes a bit of a burden for them from a tax standpoint.
Because they have to take it.
They have to take it, but they don't need it.
Okay.
And so we actually, just a couple of weeks back, we had a woman come into the office, Brenda, really nice lady. She came in and she had $11,000 a month in pension income coming in. and $600,000 of her assets was in an IRA. She was 72 years old, and her advisor had her taking her required minimum distributions out and just paying tax and kind of sticking them in a savings account and stuff like that. And I started to talk to Brenda a little bit about just what was most important to her. What do you want to accomplish? What are some things you want to do? And she said, you know, if I could just leave as much money, as much of this IRA to my family, to my kids, my 3 kids, that would make me so happy. And so I said, you know, there's this strategy out there. It's called an IRA maximizer strategy for those of us that don't need our RMDs, our IRA income. You can maximize what's left to your beneficiaries. And so I said, when you do this strategy, it ends up leaving usually 2 times as much money to your beneficiaries, and it also leaves it in a tax-free form. So there's no taxes to your beneficiaries, which is huge because IRAs are usually taxed. So it was a great strategy for her, and there's a lot of people out there just like that say, you know what, I just don't need this income, and I want to maximize it, and it can work really, really well.
Yeah, that is great information, guys. Thanks once again so much. You know, if you have a question, you can always go to our website, log on to askglobalwealth.com, leave a question there, or call Global Wealth Management at any time. You've heard how important all this is, so why wait? Call now. We hope to see you next time. For Grant Connis and Andrew Costa, I'm Ben Bauman, hoping you have a great day. So long.
Are your investment accounts exposed to too much risk? How will your nest egg be impacted the next time the market experiences a major correction?
Whether you're in retirement or nearing retirement, now is the time to secure your financial future.
Is your nest egg ready to help you meet your retirement goals for the rest of your life?
At Global Wealth Management, we want you to succeed.
Global Wealth Management is a South Florida investment management firm that specializes in capital preservation, income investment, and estate planning strategies for those planning for or living in retirement. Now is a great time to get a retirement roadmap review with Grant, Andrew, and the team at Global Wealth Management.
It's one of the most important things that you can do for yourself and for your family.
Here's what they'll do. Review your current strategy and expose some of the hidden weaknesses of your retirement portfolio. Compile a fee report to uncover how much you're really being charged in fees. Show you safer money alternatives. Plus, we will stress test your portfolio and do a risk assessment of your current retirement accounts.
We believe that planning for retirement should be taken very seriously.
Call Global Wealth Management now to get started on your retirement roadmap review. And if you're one of the first 10 qualified callers, you'll receive the top 10 things to consider when preparing for retirement guide. Now is a great time to get a retirement roadmap review with Grant, Andrew, and the team at Global Wealth Management. Call Global Wealth Management now